Hi, good afternoon, everyone. Scott Henderson Shooter. And hey, we are going to go over some charts, trying to see what kind of chaos we have coming. Of course, at the end of our presentation, please do review our disclosure. And let's jump right into this. Okay, everybody see my chart? Make sure I switch the pages right. Somebody give me a 5x5. Awesome. Believe it or not, that's a basic step we have to do anymore, because I can't tell you the number of times I've recorded videos and been on the wrong freaking screen. The challenges we have in life. All right, I'm going to start off with the dollar today. Now, note this market weakness is not, there's really nothing going on with the dollar. We're just sort of stuck in this zone. I mean, we're just pegged. But yet, we're seeing more and more names roll over. I want you to keep that in mind. On top of that, I wanted to take a peek at TLT today, sort of doing like a major markets look. Now, notice how that's heading to the south side. I actually think we break and head back towards about 81, just with what I think the Fed's got to do here. Then I want to jump over and look at Bitcoin. Now, we have broken the shelf. We hit the invalidation line here that I looked at, which got me to trim everything else that I had. I get kind of interested right around 60 back here, but there was really nothing, because this doesn't, our retest wasn't really high enough for what I call an equal ABC. And that makes it very challenging because I'm thinking that we have this impulse down. So this is going to maybe be our 3. We get a back test maybe here, and we could potentially come down to here. Versus where if we were looking at a corrective leg, I would think we should have gotten a bigger bounce off of this low to about 50% back, at least to the base of that shelf. And then we would have continued lower and probably got something like this. So I think crypto has some significant downsides. So obviously I'm kind of avoiding that. All right, let's go to the SPY. And I've got to jump in here. I want to pull my double top tool in here, put a little special thing. We're not seeing it on the weekly, but when we go to the daily, we have a clear double top signal that measures back to this support about 650. So right now I see the potential to do about a $35 push to the downside, and the market's sort of responding that way. We kind of got this double top here, and that's really what I'm running with. I've now moved the Head and Shoulders off because it didn't get the euphoria that we would have gotten in a Head and Shoulders, which we basically needed to get up to about 717, roughly in that range, for that to come off, or that to manifest. At least that was my thinking. All right, and let's take a look at the NASDAQ. Much deeper potential retrace here. Target is down around 522. So it's $80 lower. And, you know, there's some catalysts that we're going to look at. How well Google does. We've seen a number of names now that beat on front and back and still gave it back. So we had this push into earnings with a lot of names, well, some names, and then they reverted. PLTR is a good example. I mean, basically, it gave back the entire gap. So my thought is, I think we have a shot of this shelf holding, but I think it's going to depend on whether or not we're really going to get the sell here. And, you know, that is something that might not stop once we get below this shelf here at roughly 551. You know, the base of our formation is really down around 448. So if we fail here, and this is just a huge reversion to the mean, you know, the reality is that we could see that in this scenario, especially with the internal weakness and the fact that the institutions have reduced their position size. Now, in my flow analysis today, I noted, you know, where I was seeing that. I mean, basically, my scans to even get anything to pop up on the radar to see where they were. Because even if they are concerned the market's going to crash, they're still going to hold some kind of position. And I had to drop down to 2,500 open contract to see where they were, and that was still very limited. And those positions that I followed most of this morning, we're all getting pulled as we started turning to the south side after we broke below this wick on this candle. All right, so let's take a look at the Dow. Now, this is relative strength, but again, I'm getting a double top reading on this as well, which measures down to about 470. Now, with the way it's been relative strength, and realize the Dow in itself is sometimes a flight to safety, simply because there are so many big names that really don't move. The pricing's a little more stable than it is in the NASDAQ, or has been in the NASDAQ, and obviously in the S&P 500. However, when we look at the Russells, you know, we got a huge bid. I mean, they were definitely chasing this long at the open today, and it's rejected total price here. So I see this as being an ABC to the downside. So in short, my thesis is there's really not a safe play that I can see, even with the names that are working, which is why I'm basically on the sideline. So I think an ABC structure will get us back to maybe about 251 there. Now I want to jump and look at Suxel, just nasty looking candle here. We're testing our what I would classify as our invalidation mark right here. Once that gives it up, as far as price, the number that I would see as far as a retracement, just let me throw it in here. So we're looking at our next target around $35. So we could see some serious heat in semis. All right, let's jump to some other names. All right, let's go to what positions are opened. Now we opened a put in OKLO 65s. So they're working. I think we entered like 66.74. The reality is I think we could come back down here and test at least the base of this shelf, 54. I'm looking for roughly 55, 54 in that range. So about $10 lower from where we are. It's just I like to follow through. What got my attention when I saw this, and there were so many names breaking down, and honestly, I don't believe I don't have more short on that I do, but I just wasn't comfortable with them not buying the dip. Now I'm pretty confident they're not going to buy it. But an ABC structure could take us all the way to 39. So that's might be something I stick for a while. I opened up the 20th. All right, AST Space Mobile. Now I still have my $80 covered calls, which will expire 8 days. So, maybe it does flush back down to 80 where expire worthless for me. I don't think it does though. Right now it is holding the demand shelf. I don't think it's done it. Once that breaks, then obviously the structure's a little concerning. However, it really depends on what your risk model was and where your entry price was, because it can really come down quite a little bit more if you just look at the main trend channel. I mean, we could come way the heck down here and it still have done nothing wrong as far as to the downside. That's the challenging part. However, I probably would anchor with 50%. It takes out this candle, then I probably will trim. So it takes out 96.07. Now NBT, I took a stop on it. It was right there. I tightened it up this morning. So it got me out. I think I was out at 114 and change, 114.72 from like 106 was where my entry was. So we are out of that. AMTX, now we're at 166. I think my cost basis is 164. So it's done nothing wrong here. It's got this pretty clean impulse structure that it looks like it's building, off of this low. So I'm looking at this as our 3 and our 4 is in, so we're going to put in a 5. So I would think we get back to at least 191. The balance for sell side, buy side imbalance is up to about 204. I'm good with that. If it gets a little weak up there, then I trim it and I run kind of look. I would like to hold it because I think the 45Z is a decent factor for that name. However, I'm not seeing any of the 45Z conviction plays until really early May. Is my thought on the timeline before we really see it push through. And the major benefactor on 45Z is going to be the airline industry. So those that supply the specialty fuels will see the biggest benefit because that's where the largest tax incentives are going to be, just because of the amount of fuel they burn. All right. So we still are sitting here on this one. It really has done nothing, but I have no reason to cut it. I'm looking at this as we have wave 2 that's in. It's not been weak in this market, but it's not been really structurally strong either. But the idea is that we come up and we at least back test this 21 on a 50% back candidate. I mean, it's a strong candidate at this point. We have nice divergence down here in the lows. MAC is crossing back up to the upside. The only thing is we're hitting a little resistance right here, so it's got to break above that 1773 really for that to play out and manifest. But that's my look. That's what we're holding. Now, Deere, I'm still holding. I might trim it today, though. However, when I look at this structure, we have a clean. So as I'm looking at the tape, this is a clean 1. This is our 2. So 3 is way the heck up. And sometimes certain stocks tell us that certain things are happening in the market. Well, if you look at industrials, I mean, we've had like this industrial push, which seems out of place. And the reason is because we haven't seen it for a while. And I think the tariffs are aiding this. Well, one of the biggest benefactors of industrial is the equipment that they need to run. And the same thing with tech that's coming into agriculture. Deere is a big player in those new machines coming out that are going to be autonomous. And that's a whole sector that really hasn't been built out yet. I really don't think that hits hard until 2027, just because they're now building the machines, even though there's a lot that's out there. I do think Deere's going to acquire some names, though. I haven't actually found anything that I like, but I think they're going to start acquiring some of the small cap who have specialty AI robotics, specifically related to agriculture, simply because of their moat. All right, so we're just sitting there in Deere, done nothing wrong. All right. SMCI, I mean, we're sort of giving back this candle. I haven't trimmed it yet, kind of flat on it. I think I'm down like $200 on it or something. So it's not a big flag. Until it breaks into this gap, closes 50% of the gap, I'm probably going to stick with it. So it gets below 30.92. All right, now I want to address the currency sleeve in my 2030 survival blueprint. Reason is because we have the volatility coming in. So FXY, and I'm going to suggest that each of you review that if you have not, because basically the methodology that we're going in with is we're using AI to analyze where we should be positioned if these events occur. And, for example, the Bank of Japan raises 50 basis points. What's going to be the most likely outcome? Well, the most likely outcome is that FXY bounce. So as we get into the tight buy zone, this gap gets filled around 58. We might want to add a little piece right there. Not a huge piece, but it's just stepping into the dynamics of that plan. And then FXI should also bounce in that same situation. So right at about the time where we see the 50 base hike, we should see new highs in FX as far as the Swiss franc. All right, let's jump to some of the requested names. All right, BE, it's giving it back. Broke the basic invalidation line here, broke below that low. Anytime it breaks below the structure, however it's wicked, the body hasn't closed above there. So unless that body of that candle closes below there, technically it's not broke. So I'm saying this shelf needs to hold 119.83. So structurally, this is a 5. So we could get right back to that shelf. And frankly, it's done nothing wrong, even if it pulls back a little bit more, right? So, roughly 126 is viable, 114 still done nothing wrong. It probably is a lotto, as far as BE for earnings. I've had very few names I like. Like, for example, yesterday, AMD. I liked it into earnings. However, the way I have to view earnings is because I've been on the right side of the tape so many times, but I've also been on the wrong side of the tape into earnings so many times. And when I've gone back and I've analyzed all of those trades, the reality is yeah, you might catch a nice pop, but sometimes you're better off waiting for the earnings gap, wait for the back test, and then taking that entry, because it's you know where you are, and there's not a quagmire where, hey, on the earnings call they start talking down future guidance like with CMG. They're talking about same store sales are down 3.5%. They can't convert the higher tickets. They're totally low dollar purchase. They're low $9 lunches or meals or what's the popular thing on the menu. And prior to that, we were at $12 to $14 as far as the average purchase there. So when we start seeing that come out of earnings, what it's telling us is the economy's weakening. It doesn't mean we're in a recession, even though I do think we go into one. It just means that we're weakening. So trading the earnings or into earnings is rough. Like SYM is a name I'm looking for next week's earnings. However, I'm not comfortable putting it on with the weakness that I'm seeing, because if we give up these highs in the indexes, let me tell you, this drawdown has not even started. That's the quagmire that I have at this point. I see no reason to have the risk on the table long unless I have high conviction. Like, for example, there's a couple Wingstop earnings, I think, are the 28th. But after CMG's report, I made a comment on that in notes, by the way. I like the idea of shorting that at earnings, but I don't want to hold it between now and then, because the reality is premium could get whopped so hard between now and then that even if it does what I think it's going to do into earning, it's now so distorted because of, let's say, for example, they roll the price lower, et cetera. You might end up not profiting at the end of that trade anyway. So right now I'm waiting. The idea is, I believe it's after the close with Wingstop. At that point, I'm going to put some puts on into earnings, and that's the game plan. So, I want a specific, for me anyways, you can do what you want. For me, I want a specific thesis, and I want a clear vision on what could happen. I want to understand what my risk reward is. Why is the tape telling me now I'm right? or why am I not right, or is it wrong? And then I want to look at all the scenarios and decide where I want to be. So that's my thought on Bloom. And it's not unusual, by the way, for us to dump before earnings, especially the day before earnings. That's why often when I'm carrying a trade into earnings, you will see me close it the day before. Actually, I wasn't planning to do metals, but I'll add that to it, Greg. All right, let's look at Big Sky here. It's not done to the downside here. You know, we are testing this shelf here. I think doesn't think it holds. I mean, that ultimately right here on the body of this candle is where I would classify this structure sort of invalidated for the long side. It's clearly broken. So if you use confirming trend support, by the way, that works, guys. I mean, gals, it does. I mean, if you just used a regular basic trend support line on a trend, and when it breaks, you're out, you're good. If you were using confirming trend support, you went and used the 50% of the general candle thesis that I mark out here. Once you're into that final shelf there, it's taking you out way back up here at 27 versus where if you were just using trend support as your takeout, it took you out 23, $4 lower. I mean, the idea is to make money here. So any tools that can give you an advantage to hold your gains longer is a better play. All right, that's just my 2 cents. All right, ENVX, I don't think it's done. Equality for me comes in right down here around 492. I think minimum 555. This does not look, we're not getting any signs of divergence down here on the daily, so I don't think it's done. PDYN, I sort of have it flagged as a neutral, which, by the way, these are the names you guys requested. All of the red ones means I think they're bearish. So green means it seems to be okay. Red, it's bad. Yellow is marginal. So Paladine, I think it's marginal because I don't think this holds. That's my 2 cents. I mean, we gave it back. I mean, we totally rejected. Look at how fast and hard we rejected off of that sell-side imbalance that's up there. I mean, just that was hard. I mean, we're down at $6. I mean, 30% drop. You know, equality on this to me comes in, and what I'm trying to do is express where I think the heat's going. And once as my conviction builds to the downside, honestly, my perception gets more accurate. So when we start seeing the drawdowns, I want to say 3x better at counter trend or the downside, but I'm between 1.5 to 2.5 times better on the short side in picking positions than I have ever been on the bullish side, even though the bullish side is easier to trade. So I think it's got a shot back down to about 539. Crypto's in trouble here. I don't have buyers showing up. I think it could just totally, the Tom Lee story is going to be a big issue. And his margin calls, you know, he's up, are down 6.5 or 7 billion. Apparently he got on some kind of plane and flew to China. I don't know exactly what that means. I'll leave you guys to your own accord on determining what that means. You know, it looks to me like that is going to blow up. Plus, we had a bank blow up last Friday. I'm not recalling the name of it, but I think that's going to be one of many. I think we'll hit an accelerated time frame, second, third, and fourth quarter this year, where we have more institutions fail. And realize we still have not cleared out all of the commercial debt that needs to be refinanced, besides the federal government and them having to refinance between $1 and $3 trillion in the next 6 months. So that's the only stable coins in Bitcoin. I'm not getting too far off base here, but stable coins could potentially become a vehicle to prop up Bitcoin, but that's not until we find a floor, because it's going to be a progression. There's a huge amount for every $1 into stable coins that it's going to create a treasury transaction at about 65 cents. So the dynamics are there. So if the volume of that money shifts into short-term treasuries for the security for the stable coins, that's a good place where the government can raise capital, because they can hide the costs to the end user, because people aren't going to see it in the transactions themselves. And ultimately, that's what all these vehicles are designed to do. The inflation is designed to be hidden so it doesn't slap us in the face, and we don't see the fact that our buying power of the dollar went from $1 to 50 cents. They want to do it in micro moves, so we don't see it. But it really is a superb vehicle to accomplish that for them. So I think we have it's broken. We get below this 1637, it's got a date with $5, and that's challenging to tell you if you're holding it. So, all right, CoreWeave. Really, it's going down for this 5. What this is, larger structure. It's going to look at this as 1, call this 2, call this 3, call this 4. 5's going back down here. So it's got a shot back at $68. All right, Galaxy. I've got it targeted back at about 1672. Main reason is equality on the ABC. That's what I see here. So this is my A, this is my B, and I'm seeing equality. Now, could it be done? Yeah, it could be done. It can be done right here. That would be a good equal spot for a shallow C, right around $19. So we want to watch how it acts there. But right now, if you look at volume here and RSI, this thing is confirming like a lunatic. I mean, really. I mean, we could actually break this low here. All right. So in other words, this being our confirming, it's not confirmed because it's not the lowest low in price and lowest low in RSI. But this could also become the new low in price that's confirming as well. So a shot down to 1290 and Google's new AI model they roll out sort of shook the market because they added a lot of tools that replace existing software. Now, we're hearing conflicting stories on that, but that's just raging through the markets because now everybody realizes that the existing moats, like CRM, for example, can be completely replaced by AI, and you no longer need the software to run it. That's crazy. It's just like right now I'm building out my HELAP OS, and the concept is to eliminate charts, to eliminate the broker, eliminate all of that stuff functionally, and give your AI agent the tools to give you everything you want just on one quick command, like walk up. Okay, what's happening in the stock market this morning? And you have a structured way to look at it. And by the way, it'll be out. I want you guys just to check. If you haven't joined or followed the AI tutor on my Substack, do so, because I'm going to launch the first screening prompt this week. There's going to be a lot of AI tools that will come out in that. And ultimately, I don't know how far I'm going to go into it, but as far as the idea is to take as many tools as possible and make them accessible to everybody, so it simplifies your life. And this is sort of I'm going back to the Paul Tudor Jones. There's a lot I got out of that work, by the way, in studying him for a couple months. And obviously I wrote the article and everything about it. But the main point is I'm trying to establish a way to determine if I can trade this stock. Like, at what point can I trade Galaxy? At what price, what conditions need to be in place? And when is it a no-go? And I want an automated way to look at that across the universe on charts. So obviously we can make a decision based on it. But I would think that we at least test this wick about 1738 in Galaxy. All right, Ethereum, it's in trouble. I'm going to come out for the weekly on this one. I have it potentially back down to this shelf at 1,500. It's harsh. And I think our issue is the margin call, okay? Because when they raise the margins 35%, whatever it was, on gold and silver, literally to open up one contract in GLD, they wanted $28,000 in margin. And it's just nuts. But that doesn't mean you just won't buy a new position. It means the people who have a position open, who no longer have the margin, get taken out. So what we're seeing now is the total price declining in the stock market. It's just a process loop that just keeps repeating because as value of the existing holdings drop, their ratio on their margin continues to increase. So it's just going to keep going. In other words, another 1% or 0.5% today get margin calls and those positions get closed. Well, what the heck does that do to price? We're seeing that in crypto too, because that's also attached to margin as well. All right, let's look at Bitcoin again. Just reiterating, I think 55.60 is valid. All right, looking at PayPal, just torched, absolutely torched. I'm going to come out for the monthly on, and I'm actually surprised. I really am. All right, so we have two potential outcomes: a shallow ABC or equality. And this thing's toast down below $20. So it has a potential of losing 50%. Way too much more risk. We broke the shelf in RSI. So this divergence that was there is gone. right? We are not confirming yet, but there's a good possibility that we get a confirmed low here, confirmed low. And then we put in a divergent low below that. That would be very plausible with how Elliott wave and how those extensions work, both bullish or bearish. Just be cautious. I don't know that I would be holding any position in there, even covered calls, if I was trying to hang on. All right, team. I think the shelf, maybe we get a shot, maybe buyers show up. A lot of volume. You know, when you're approaching a squeeze where you're going to have a reversal, it's very unusual to see increasing volume into the downtrend. So what you're seeing is more sellers are coming into the tape, and once in a while you get a buyer that jumps in. So the dominance here from this high has been the sellers have been controlling this tape. Well, if you look at your pushes, this is Flushing Drive 1 on the peak of volume. This is Flushing Drive 2. So what likely do we get over here? Equality, a Flushing Drive 3. I'm always looking for that when I structurally look at a map. So there's going to be better choices, better names. I think I would rather take a shot at SYM into next week's earnings than trade team here. Okay, let's go back to a daily on Fig. It's just toast. I mean, it's hitting a little bit of a floor. If you measure your fibs just off of the shelf, the 618 is down at $14. It's already below the 50%. We really need to fill this gap. However, my conviction for a trend change does not occur until we take out that last lower high right there. So that would be what I would classify. Hey, it's telling us, yes, we've confirmed a trend change. We're no longer in a downtrend. We now got a shot at a bullish trend. That's just sort of my thought. All right, let's look at Sentinel. This is in trouble too. And you know, I don't ever like sessions like this where I'm looking at a lot of red names. Market is not conducive to add to even a name that you have a conviction on, like Sentinel One here. Until we find our bottom and we start getting rid of this sell side kind of pressure that we have, and more names stop falling into that block of, you know, hey, I'm in sell mode. It's too risky going into small caps here on that. That's just my 2 cents. You guys do whatever you want to do, but that's me. I'd rather sit on the sideline, wait for the right setups, make my couple bucks, you know, 3%, 5% here. And hey, if in this market, I've been able to hit like 24% for the first month of 2026. I'm good with that. You know, so that's sort of my model. I'm sticking to it. That's what it is. So any other requests before I end with it? I got done pretty quick today. 39 minutes, man. Gold and silver. Let's look at GLD. And I'm digesting. It doesn't look done. Looks like, you know, we've got our first, could be done though, right here at a 3 overshot. Yeah. Well, it's good. You know, that's a good thing, Greg. I mean, you're not taking the heat, right? I'll do ENPH next, Robert. You know, that's, you know. So, you know, I would think that we do get a decent pullback here. I'd like it better. I would, you know, I'd like to actually put on a little position here in gold. It gets back to between 406 and 374. That shelf holds. I still think that's a pretty aggressive sell here. And I'd like it much better back at this buy shelf, if that is our 5. That's just, there's no reason for me to buy right up here. Even I would rather buy TQQ puts weekly or quarterly, and it'll do the same thing that buying gold. And the likelihood that you can pull 40, 50% out of that piece versus buying gold as a safety net just makes more sense to me. And that it's just sort of how my thinking is there. All right, let's look at SLV and then ENPH and COPAC. All right, now we're starting to get a nice little floor here. We've definitely overextended. Still is a ending diagonal, which means we probably put in a flat up here on the top. So maybe it puts up to the 3618. Silver looks better than gold does here. Maybe some cash secured puts below 71 would be prudent. And if it gets put to you there, great. Plan on your next block below there. You know, they've been trying, Robert, as far as a relief rally. I'm extremely skeptical that it sticks here because there's, you know, we've got 2 things that are ahead of us. The tariff news from the Supreme Court, right? And BOJ with a rate hike. If both of those hit us at the same time, it doesn't matter what relief rally we get. We're down 10%, bro. And that's when, you know, and I, you know, as I think back, going back to October 22, the dynamics of the market change. And in 2026, it still really hasn't changed. What we've had are these technical buyers. They're driving certain names up, then they're dumping them and they're rotating into other names. And it's the same bat of capital. They're able to pump the market enough today with whatever systems they're using where they're pulling out their profit and then they're letting retail hold the bag. And that MO hasn't changed. I don't see it changing because the regulation doesn't address. I mean, they're not supposed to be able to run 500 algos together that talk to each other. But when you start seeing all these blocks and splits that come in bigger than the average size, like for example, take Morgan Stanley Trade Desk, they probably trade, 5 to 10 billion a day in different commodities, right? So when you see a trade that ultimately is at a value of 50 billion, but it's in the same direction as what Morgan Stanley traded, right? We now know that they are working in cahoots, pushing this market and dumping this market. And that is, is the market rigged? I don't know the answer to that. Do I think the market's rigged? To some degree, yes. And that's just my thoughts. So SLV looks better. Silver looks better. Again, the only thing I would probably give it a shot is with cash secured put. All right, let's look at ENPH. I'd love it actually if we did get a relief rally so I could sell it. Actually, it looks decent here. Relative strength in market conditions that were here. I wouldn't touch it if I owned it. All right, let's look at COPEC, but numbers not changed. 68 is its next shelf. Maybe I'd take some profits there. Copper, silver still looks better. 5 is our longest wave. Challenging with that, it's very euphoric on the retrace. Hard to hold COPEX here. I mean, 73.50 is where my start buy zone would be. All right, let's look at run. I've got a double top formation, measures back to $10. I'm wrong, or I should say the strategy is wrong. If it breaks back above this, what is it, 22.42? So that would confirm a trend change right there back to the upside. And you could short it. Nobody ever likes it when I say that. You could short it, though, if it invalidates this level. It would probably be a good short because the market will just dump it. It's one of those names that likes to dump when it breaks support. It just does. Just look at where it's broken here. Broke this wick right here, boom, dumped, right? Broke this wick right here, boom, dumped, right? Broke this wick right here, boom, dump. It is a name that does like to dump. Well, so we're at the higher end of the range, looking at just bringing in the Bollinger Bands. I mean, we're squeezing here, okay? The problem with a squeeze right there is what happens after we squeeze. We go into a further downtrend. So, to me, it looks to me more like that is a very viable play to the downside. So, all right, any other names? Well, great, folks. We got it done quickly. I expected it to be short anyways, but, well, I hope you guys survived what drawdown you've currently seen. And I look forward to the next time, folks. Be safe and well and great trading. And I'm thankful for you guys too.